Oh, hello everyone. It's Susie, Crypto Granny here. The date's the 3rd of May, 2023, and the time in Europe is 16:56. We have a lot to discuss today. There is a lot to discuss. It's going to be longer than normal. And just looking at the data from the 2nd of May to the 3rd of May, there's lots of news stories out. The biggest thing today is the Federal Open Markets Committee. Will they rate rise 25 basis points and bring cash to 5.25%? I think they're absolutely nuts if they do it. They have contagion in the system. People are worried about the regional banks. It's getting worse. It's going to cause depression as far as I'm concerned. And I think they're mad. Also coupled with that, the RBA rate rise on Tuesday, the first Tuesday of every month is when they have their meeting. And they brought cash up to 3.6%. And I think this is about the 11th or the 12th rate hike in Australia. And it's causing a lot of pain to the consumer and to people where their mortgages have literally doubled or tripled. Also, the housing market's coming down quite quickly as well. I think they're mad, absolutely mad. We have contagion in the system, which means other banks can get affected, regional banks particularly. If you looked at my podcast the other day, all the major banks in the US, 10 of them or 11 largest banks in the US have got something like 78% of the deposit base. And a bank can fall down just because people withdraw the deposits. As soon as there's something in the paper, people worry about it. Oh my God, that's my bank. I've got to go to the bank and withdraw the money or do it on the internet or whatever. And if a bank loses 100 billion of deposits, like we saw with First National Bank, then, there's no way a treasury operation or a bank can operate like that. If you start losing money on the treasury desk, you're going to have to try and get the money back in. If you raise rates, it's a signal that you're in more trouble. If you show higher deposit rates, and it's just an absolute, contagion. It just makes things worse and worse. And no one can manage a bank's balance sheet when you're losing 100 billion of deposits. It's just crazy. And I cannot understand why the Fed is rate rising or why the RBA is rate rising. I think they're mad. They will have to start easing. Things are really bad out there, seriously bad. Do these people live in bloody golden ivory towers, and they're just not familiar with what's happening on the real, on the street in terms of the consumer, right? It's just nuts. Okay. Now the bond market is priced at 100% that the Fed will go today. We're going to hear it at 2000 US time. And, obviously, it's priced in 100%. I think the Fed's mad. They shouldn't be rate hiking. They are crazy, particularly when there's an overall lack of confidence among investors and depositors, particularly with the banks. There's a lot of fear with regional banks. Regional banks basically, have trouble always getting in deposits because they're second-tier banks. And, this is just getting worse and worse and worse. So it really smells of 2008, okay? Honestly. And, Jeremy Powell is just mad, okay? What people are going to be worried about is his commentaries about the banking sector, clearly the health of it in the economy, and are they going to keep rate rising like mad? Because they don't seem to be listening to anyone. Just like the SEC, they're not listening to anyone, and it's just getting worse. Investors have lost their confidence in the US banking system, right? And when that happens, the systematic contagion can happen so quick, it is not funny. And we're seeing it with the decline in equity shares for the regional banks on the stock market. It is a shocker. Now, we know about First National, we know about all the other banks that went pro Silicon Valley, God, I always forget these names, Silicon Valley, what was the other one called? It'll come to me. But anyway, look, the thing is, we've seen it. It's not great. Also, the US has got to increase their debt ceiling. If they default on their debt, all hell's going to break loose, and probably Bitcoin will go higher in price. And Standard Chartered Bank said Bitcoin, if the US default on their debt because they need to increase the debt limit to another $1.5 trillion, adding on, they've got $31 trillion of debt out there, another $1.5 trillion, which needs to go through the Senate. Then, if that doesn't happen, then Bitcoin could go up $20,000 odd. This is what Standard Bank Chartered said. So, this is really, really bad, okay? Now there's other banks that are getting smashed on the stock market. Pacific West, their stock fell about 28%. It's the pace of this, how quickly these stocks are falling. It's not funny, really, really fast, okay? And other regional banks are also getting hit as well. The regional index was down about 6%. It's very, very bad indeed. Also, Western Alliance Bancorp was, also got smashed. and that was down 15% or so, okay? And as I said, the regional bank index is down about 6.3%. I mean, they're mad, seriously mad. It's rate rising in this environment is a shocker, an absolute shocker, seriously. JP Morgan, one of the biggest banks in the US, bought First Republic for about 10.5 billion, and they also got bailout money from the government, $50 billion or something. And it's obscene, really. It really is obscene what's happening here. And I cannot understand the US rate rising and reducing money supply in the financial markets. It's going to cause it's going to cause hell, right? I mean, even the rate hikes have killed the regional banks as well, okay? They cannot compete with the large banks, right? Many analysts out there are concerned there's going to be more banking collapses in the US, and I'm sure there will be. The negative sentiment affecting the regionals is getting worse and worse and worse, okay? Western Alliance and Pacific West got smashed, and they're starting to smash everything else. And, we've seen it with the collapses of Signature Bank. I always forget these banks, Silicon Valley Bank and Silvergate, and many others, including Credit Suisse in Switzerland, which got bailed out by UBS for $1, allegedly, okay? Many people are really concerned about this. They believe that, there's a lack of confidence in regional banks. If that's the case, you will see more and more bank collapses, okay? Chris Marzelek from the CEO of Crypto.com warned we expect to see more pain as the US banking crisis unfolds. It's gathering momentum, and this is not the last of it. And I agree with this guy. Once contagion sets in the banking system, the financial market system, rate rising in that environment is just absolutely stupid. It is so stupid. I cannot believe how stupid these regulators are. They just have no idea. I've got to tell you that. It is a shocker. And, banks can go to business very quickly when there's a run on deposits. It's as simple as that. You cannot stop it, right? There was a story here today about every Friday, one US bank collapses. Who's next, right? And again, people are starting to talk about PacWest, Bancorp, or, other banks as well. But the crisis is really, really bad. And I just cannot understand what the US Fed is doing. I mean, seriously, absolutely crazy, and it's getting worse. Also, we're seeing a lot of people that are losing their jobs, right? And the US unemployment figures are not showing that, and I don't believe them, right? We've already seen IBM is pausing hiring. They're getting rid of 7,800 people because they're saying that AI, generative artificial intelligence, is better than people, right? And this is what we're going to see. This is a big trend going forward. A lot of people are going to lose their jobs. Also, a platform, an education platform called Chegg was one of the first victims of this. They fell 50%. It's not great, right? It's not great. Even Morgan Stanley is planning to cut off 3,000 people because of profit squeeze. We're seeing people lose their jobs right across the board. If you look at this index, layoffs.fy, last year, 186,000 people lost their job. Sorry, this year, 186,000 lost their job across 637 tech companies. Last year, it was 164,576. So we've already got more people losing their jobs this year than last year, and it's across 637 companies, right? And, where are the Fed getting their numbers for unemployment? Seriously, non-farm payrolls out on Friday, but I just don't believe the figures. I really, honestly don't believe the figures, right? Again, not great. And JP Morgan got, this bank, FRC, Federal Republic's bank, for buttons, honestly, really for buttons. 10.6 billion, and they were allowed to bail them. They were bailed out by the FDIC with a $50 billion 5-year loan at fixed rate funding. I mean, the big banks are just getting bigger and bigger, and the regionals are getting killed. Now, I think there's about 8,000 banks in the US, and probably a good majority of them are regional banks, right? It's not great. It is not great. Absolutely not great. And coupled with that, we have MiCA in Europe, which, is driving cryptocurrency technology. And, people are moving out of the US. Exchanges are moving out of the US, as well as cryptocurrency companies, right? Because they're getting fined all the time, right? The MICA survey shows, and this is markets in cryptocurrency assets. The regulation in Europe is quite a good regulation, though not perfect. It's still very clear. People understand what the regulation is, but certainly in the US, they don't. And, the SEC chair, Gary Gensler, is not listening. The guy hasn't got a clue. He's not listening, and he's totally arrogant, okay? There was a survey done by European crypto investment firms, and they found that Lisbon, Berlin, Paris were the world's top 10 crypto hubs. Portugal was very crypto friendly, and you're going to see exchanges and corporates and everything else move out of the US. And we're currently seeing that right as we speak, right? This markets in crypto assets regulatory regime was officially passed by the European Union lawmakers last month, and it's very positive because it has clarity, right? Even though, it may not offer everything, it certainly has clarity about a clear framework for cryptocurrency corporations, right? It's a shocker what's going on in the States, an absolute shocker. People will move to the Europe and everywhere else, Middle East, and we're seeing that, okay? Even Robert F. Kennedy, the cousin of Robert F. Kennedy, said, the war on crypto may have caused the bank crisis. I believe that. Presidential candidate Robert F. Kennedy believes that war on crypto could have led to recent bank failures, okay? He said, between the Fed and the SEC and everything else, certainly it's caused the bank failures of Silicon Valley Signature and Silvergate Bank, right? And this is a crime, honestly, it really is. It's not great. They've been basically supporting all the large banks and not the smaller banks, which is a shocker, okay? Now the Biden administration is seeking to impose a 30% tax on crypto miners in the US, which is another slug on crypto corporations as well, right? And again, they're basically wanting to get money out of crypto miners. And again, the crypto miners will move out of the US. It's just that simple. They came from China to the US, and they'll move out of the US. It's very, very simple to see what's going to happen here, right? And again, more US companies are going to lose money. They're going to lose clients and everything else, and they will move out, right? This tax is very unfairly targeted, as the crypto industry says. It really puts a clear line in the sand. They don't like the industry. They're looking for ways to hamstring it. This is just another way to go after the industry. And, again, it just, there's penalties for everything. And there's so many different departments in the US, giving penalties out to every exchange and corporation related to crypto. It's just too much. And look, honestly, I think Binance will move out of the US. I think Ripple will, I think all the big exchanges will move. Bitflyer has moved out of the US, and they're now in Dubai. They were fined by the US 1.2 million by the New York State Department of Financial Services. And again, it's just so many different regulatory authorities in the US that are killing the cryptocurrency market in the US, okay? Apparently, they got fined failing to state cybersecurity requirements, the regulators said on Friday. Anyway, Bitflyer has moved out of there. They paid the fine. Coinbase, paid $50 million in charges. We saw Robinhood paid money. We saw Kraken pay money. We've seen Binance paying the money. We've seen Poloniex pay money. It just goes on and on and on, right? Coinbase stock is getting smashed at the moment because of the US regulatory authority. Bank stocks are getting smashed because people are lacking confidence in the US system. And again, people are just getting fined all the way. Poloniex, which is part of UBI, Justin Sun, they had to pay a $7.6 million settlement for apparent violations of sanctions, right? And this was set down by OFAC, which is another regulatory authority in the US. Seriously, the US State's Department Office of Foreign Asset Control. My God, how many regulatory departments do they have in the US? Seriously. So, again, Poloniex got out of it, and now Poloniex, like UBI, is in Hong Kong. Even Justin Sun, there's a case against him with the SEC as well, and it just goes on and on and on, right? We're seeing Coinbase again have launched an international exchange. It's going to be on, in Singapore. We've seen Gemini get out of there. They're also looking at Singapore as well. It just goes on and on and on. Seriously, people, it's a shocker. Coinbase went to Bermuda and Gemini went to Singapore, okay? And, what can they do if they want to build a business? They don't stay in the US, that's for sure. And it means that US clients in crypto don't get serviced properly. They can't even hedge themselves if they want to because they're not allowed to do futures or anything. We've seen cryptocurrency exchange Kraken. They're moving out of the US as well. And, it just goes on and on. Bittrex moved out of the US. Deribit moved out of the US. Nexo moved out of the US. I think the next one will be Binance because Binance is inundated with stuff from the US regulatory authority, inundated at a workforce of 8,000 people. They have 1,000 people in compliance. It is a shocker, right? How can you run a business like this? It is impossible, absolutely impossible, right? Even Bybit, as I said, is in Dubai now. They've set up a new lending service and basically to offer people product and solutions and everything else. But again, they've moved out of the US, okay? It's as simple as that. If you want to expand your business in terms of cryptocurrency, you get out of the US, okay? Because you're just getting killed by all the regulatory authorities over there. Now, let's talk about Ripple as well. Ripple issued $1 billion out of their escrow. Currently, I think the escrow is about 48 billion. Originally, it was about 55 billion. They moved out so much money, and basically with their XRP, if it doesn't get taken up by people, then it goes back to escrow. So 30% of the 1 billion got taken up by new holders of XRP, and the rest goes to EXO, okay? Goes to escrow, which is good for them because it means that XRP is selling more XRP, and basically people are holding the XRP, okay? So that's interesting. But also the lawsuits Ripple just keep going on and on and on, okay? Ripple obviously released their XRP markets report to provide updates on what's going on. They're still fighting the SEC. They continue to fight the SEC. And if it has to go to the High Court or the Senate, it will go to the Senate, right? Mr. Brad Garlinghouse said there's very pro-crypto regulation in Europe, UK, and the UAE, the Middle East, Dubai. But again, to stay in the US, if it continues like this, they're going to have to move out of the US. And that's pretty, obvious for most cryptocurrency corporations as well as exchanges, okay? It's just a matter of time. Also, there's been a bit of a rumor that the SEC are going to meet with Ripple on the 8th of May, but it is speculation. Some people say it's not happening. Others say it's just a Twitter rumor mill thing. So keep an eye on for that date. It'd be very interesting. Also on the 6th of May, apparently Judge Torres is supposed to make, a decision on whether XRP is a security or not. Also in the press at the moment, there's a lot of talk about Gary Gensler and the Howey test. And basically Attorney John Deaton is just saying the Howey test, which was developed in 1946, is just not reasonable. Cryptocurrency was not around in 1946, and the US SEC is just fighting with Ripple with incredibly wrong claims, and honestly trying to use a law that was developed in 1946. And Mr. Gary Gensler, the US SEC chair, is not even talking about RippleNet's technology, never mentions it. And when you looked at him on Capitol Hill, he didn't mention technology at all, absolutely not at all, okay? The Howey test is an irrelevant test. It is just stupid. As per the Howey test of transactions security, if an investment of money in common enterprise with reasonable expectations of profit derived from others, right? Again, the Howey test is just too old and it cannot be applied to cryptocurrency technology, right? Absolutely not. Now, Bill Morgan came out and criticized Coinbase because Coinbase still haven't put XRP on their platform, okay? Coinbase has always been against XRP. They've loved Bitcoin and Ethereum, but they've always been against XRP, which is very, very unfortunate. And, that Coinbase, I don't like them as an exchange, not at all. Also, the lawyers have been out. Mr. John Deaton also stated that District Judge Elisa Torres is yet to deliver a summary judgment in the XRP lawsuit. And the expectation is she'll be doing that very soon, hopefully, because her 60 days is nearly up on the 6th of May. And she's basically saying that, look, we need to get a decision here. Obviously, The lawyers are saying we need to get a decision. Maybe there'll be a settlement. We don't know. But again, it's just taking more and more time, okay? This has been going on for more than 2 years, and it's a bit of a joke. And now there's something about XRP turning fights against Chevron doctrine, most important in crypto. XRP John Deaton said that US Secretary under Gensler has grossly expanded the reach of the Howey test. In a recent development, the US Supreme Court agreed, considering abolishing the Chevron doctrine, which allows federal regulatory agencies like the SEC to take decisions when there is no clear statute in law. Okay. Basically, this Chevron doctrine apparently, is giving Mr. Gensler too much power. He's certainly outside of his jurisdiction, and seriously, it just doesn't apply, right? Mr. John Deaton said the Chevron doctrine case is not directly applicable to what the SEC and Gary Gensler are doing in the market. He said it's a clear violation of decision-making liberty the SEC gains from the doctrine, okay? And it's just garbology, absolute garbology, honestly. This Mr. Gensler is causing America incredible costs in terms of their development, and America's supposed to be an entrepreneurial country, and he's absolutely killing it. Mr. Deaton said that they are misinterpreting the statutory and are grossly expanding unconstitutionally the Howey test definition, and it reached applying it to secondary market sales and underlying assets, right? This is a very old doctrine, and the SEC, can't just bring out old doctrines and try and apply them to cryptocurrency technology, right? Mr. Deaton further said custodian banks fight against the US Federal Reserve is the most important in the crypto industry. The Federal Reserve Board held in January 29th denied the bank's application to become a member of the federal system, reserve system, owing to its focus on crypto assets presenting, they said, significant safety and soundness risk. The attorney argued that it's because the Chevron doctrine that Custodian Bank had been denied despite promising more than 100% reserves. He said the comments are just a joke and that shouldn't even be applied, okay? Another article here was, is Ripple like Chevron, XRP like oil? Why the Chevron doctrine matters? XRP was looked at as a comparison to being oil like Chevron. Corey Johnson, I think he was working for Ripple at the time, and he was, off memory, he was a journalist, right? Claimed in 2008 that Ripple is like Chevron, XRP is like oil. You can buy the oil you want, and it doesn't give you access to Chevron's profits. And you can be a Chevron shareholder, but you have no control over the price of oil. This comparison took on a new release Monday. The Supreme Court announced it will address the Chevron doctrine when it gives federal agencies such as the US Securities and Exchange Commission significant leeway in interpreting ambiguous laws. Oh my God, another law. Supreme Court justice will decide the next term whether to overturn the decades-old precedent. The 1984, the internet came in 1992. Cryptocurrency technology came in 2008 with Bitcoin. I mean, this is a joke, man. This is like 50 years ago. Supreme Court justice will decide in the next term whether to overturn the decades-old precedent. The 1984 Chevron defense, named for the court's decision in Chevron USA versus Natural Resources Defense Council, has become one of the most frequently cited precedents in the US administration law. This is nuts, right? Absolutely nuts. This law apparently was established where in statutes ambiguous, court should defer to the interpretation of appropriate regulatory authority. I mean, just crazy, right? This defense of Chevron is just absolute garbology, right? Critics said that the Chevron doctrine argues that it grants regulators overreaching powers and allows them to exceed the statutory framework given by the Congress. In the context of the Ripple lawsuit, the SEC may argue that XRP qualifies security under the Howey test, even though the cryptocurrency did not exist in 1946. This is just madness. And I agree with the attorney, John E. Deaton, the Chevron doctrine is a very dangerous approach because it involves unelected government officials, i.e. like Gensler, who was put on by Biden, who he's put on until 1926 or something, unelected officials who have extreme power. The best example, he says, is Gary Gensler, chairman of the SEC, who can disregard existing law. Oh my God, this is even worse than I thought. Even the judge disagrees with interpretation. If it is obviously reasonable, then the agency can define the rules, warns Deaton, who has seen no direct application to the Ripple SEC case. According to him, the Chevron doctrine is more important in other respects. Clearly, XRP is not an investment. XRP is not a security. And this Chevron case is just not applicable. But of course, Mr. Gary Gensler is using it. I mean, what is this? Just crazy. I agree it is totally unconstitutional. And seriously, it's just a joke, right? Again, the SEC and the regulators in the US are totally against cryptocurrency firms, including Custodia Bank, okay? And, you cannot, cherry pick and give great opportunity to JP Morgan, one of the biggest banks in the world, and then every other bank like Custodia Bank or XRP or whatever, you just hit them with rules and regulations and fines. I mean, this is just unbelievable as far as I'm concerned. Absolutely unbelievable. Also goes on that pro XRP lawyer says Judge Torres has previously ruled against the SEC. Oh my God. Think about all the money it's costing the lawyers, right? It's incredible. I mean, what the lawyers are getting paid. Apparently FTX, just a side note, they've already spent $100 million with lawyers and it still goes on. The lawyers must be, just rubbing their hands with glee, seriously. So Judge Torres apparently had already ruled on this whole law. And it happened, I think in 2018. So, man, I'm just horrified with this. Ripple attorney Jeremy Hogan, a pro-crypto lawyer and partner of Hogan, shared an interesting update about the case. In a tweet, Mr. Hogan revealed that Judge Annalisa Torres had previously ruled in the case involving the USC and leading global mining group Rio Tinto, which is an Australian miner. It's a very big miner. It's in copper. According to the pro-crypto lawyer, Judge Torres ruled against the Security Exchange Commission on this pertinent issue, right? And basically, said that it doesn't apply, these stupid laws about the Chevron rules and all this sort of thing. Another Twitter said, Mr. Diehard Cuban fan, thank you very much. I love the fact that she has had the SEC in a court before and ruled against them. We don't want this to be her first rodeo. Seriously. So apparently, Attorney Hogan applied a document called, he cited a page from Morrison's Forrester 2022 article. And according to Judge Torres, ruled that the scheme liability does not exist when alleged misrepresentation or omission are the sole basis of a claim. In Rio Tinto, the Torres found all of the alleged actions and conduct forming the basis for scheme liability were misstatements or omission. No scheme liability claims could proceed as expert of the article, right? She basically said also to reconsider in the light of the Supreme Court's 2019 decision on its case against Lorenzo. Judge Torres refused explaining that while Lorenzo made clear that the dissemination of false information provides a basis for scheme liability, it should not be mean that misstatements without more are sufficient to trigger a liability. If you can understand that, you're doing very well, people. Seriously, you need a lawyer's degree to understand this. So the bottom line is she ruled against the SEC about using the Lorenzo case, but also using the Chevron case, right? Basically what she said indicates that she may move forward with the XRP story in favor of XRP against the SEC. Wow, incredible, just incredible. Anyway, other news stories at the moment is Flare integrates blockchain API on Google Cloud Marketplace. which is good for them. Again, they're compatible with the Ethereum virtual machine. They're using all different programming interface and portals to basically integrate Google Cloud Marketplace and onboarding many different blockchains from other blockchains and API application programming interfaces to the ecosystem, right? So that's good for them. They've included Algorand, Binance Smart Chain, Bitcoin, Doge, Ethereum, Litecoin, Songbird, and the XRP ledger. So that's great for those guys. It makes it easier for people to actually use dual technology, have cross-chain links, and it's not so onerous on the developers, and it doesn't cost an arm and a leg with ongoing maintenance and hardware costs. So that's really good for those guys. Flare Integrated just comes days after Polygon Labs and Google announced a multi-year partnership for cloud computing. So certainly Google's starting to get into this in a big way, which is good for them as well, because you miss out on cryptocurrency technology, you're just going to miss out on all the gains going forward. Also, Cosmos-based DeFi protocol Nosmos raises 2.5 million to build the first cross-chain DeFi lease, which is great for Cosmos. Again, it's an interoperable application on Cosmos. They secured 2.5 million pre-seed, and this is great for Cosmos, okay? And we love Cosmos as well. Don't forget they are releasing tokens, and those tokens or coins may deplete some of the price in Cosmos because there is a bit of supply coming to market. And if you looked at my platform and a member of our group, you would have seen that as well. So that's a good story for Cosmos. Binance Chain had over 10 million active addresses in April compared to Ethereum of 4.9. And again, I think Binance is the cheapest coin out there. It is huge and it is killing Ethereum. And in my mind, Ethereum should not be at 1,800 or 1,900. I've said this time and time again. Binance is killing it. Forget about the regulators. They will move out of the US and just get bigger and better. Also, Crypto.com launches Chat GPT based on AI user assistant Amy, which sounds very interesting in itself. A lot of crypto are launching their own AI, which is good. Also, VeChain to make prestigious tennis tournament trophies. Is that right? Digital, showcasing blockchain NFT technology to the audience. Now, VeChain is doing great stuff, okay? They've got a partnership with International BNL d'Italia, a prestigious tennis event hosting the top-ranked players between May 8th to the 21st. These guys are killing it. One of the cheapest coins out there. Very, very cheap. VeChain is in San Marino, but it's has a lot of clients in China and is loved in China, and it's very, very cheap. And this is a big partnership for VeChain, absolutely. Apparently, it's very big. They have something like 500,000 attendees across the tournament. It creates massive opportunities for VeChain to show its real world uses, right? And VeChain is an amazing story. It's supply chain management, but it also looks at the integrity of product to make sure that it's not fraudulent, okay, or copied or whatever. It is a great story, VeChain, and it's a very, very cheap crypto. Also, there's a very large whale that moved over 504 million Ethereum in one massive transfer to Binance. And it's probably one of the biggest, one of the biggest transfers they've seen in 5 years, according to crypto analytics firm Sentiment. Excuse me, let's just have a glass of water. Oh, wow. 505 million moved to the exchange in a single day. Wow, that's big. And that went to Binance, apparently. Amazing. Incredible. I wonder what they're going to do with that. Interesting. Also, South Korean publisher Newitz launches $10 million Polygon game. Polygon is killing it at the moment, people, and I regard that as very cheap. They raised $12 million for Intel X Web 3, and now they're launching a grant program with Polygon Labs. It's a game publisher in South Korea, and it's next generation Web 3 games. And they're using Polygon because it's a lot faster than Ethereum, okay? And that's a great story for Polygon, which is being used by them as well. And I do regard Polygon as very, very cheap. I regard Chainlink as very cheap. They're getting more and more clients every day. Plexus just joined them to build a cross-chain adoption. And, you know, again, Chainlink is amazing. It's an amazing story and very, very cheap as well. Plexus is a cross-chain DEX aggregator with a concentration on offering secure and cost-effective multi-step currency swaps across all different networks. And if they're using Chainlink, they're very clever because Chainlink's pricing oracles are amazing and their security is quite incredible. I have to tell you that. Also, what else we got here? There's so much stuff coming out. It's hard to keep up with stuff. Chainlink is a program designed to help Web3 projects growing, providing them with an access to Chainlink services and technical support. Fantastic for Chainlink as well. Also, as I told you the other day, that they're partnered with Amazon, and that's a big story for them as well, okay, to build with Amazon Web3 type services, okay. Another one here was Dodge adds 340,000 new holders in 3 months as investors buy Dodge. And obviously every time Elon Musk opens his mouth, Dodge, you know, moves up a little bit higher. We don't buy Dodge. But Binance users deposit 4 billion to farm Sue tokens ahead of a mainnet launch. This is the thing that Justin Sun wanted to get access to, and CZ said, please send your $52 million back to yourself because this is only available for retail clients. Also, this thing's trading on South Korea exchanges as well, but apparently it's done very well. It's basically, you know, it's being launched as native gas and governments for layer 1 blockchain, and it's been taken very well. Binance will distribute 40 million of the SUI tokens to retail holders. And apparently people that want to get access to that, basically they deposited quite a lot of money with Binance to get access to it, something like $4 billion, okay? So let's quickly go back to the crypto market. I forgot to mention that. Market cap 1.182 trillion, volumes low at 28.693 bill, liquidity 4.515 bill, Bitcoin dominance 46.3%. Bitcoin as we speak is at 28,280, 1853 for Ethereum. US Tether is slightly under $1. Binance got smashed from 335 down to 322, still very cheap. There's a very strict trading range on Binance at the moment, around 320 to 335. Sell at 335. You buy here at 322 or 330, 320. XRP at 45, 8.37, 7OP at 45. Dodge at 0.077 and Matic at 0.976. So let's wait for the FOMC meeting. It's going to be very interesting to see what they've got to say for themselves. I think if they rate hike, they are absolutely crazy. Seriously, we have contagion in the system. It's not a great story. But either way, cryptocurrency is going to do very well in this environment because people don't trust the banks, okay? And you see that as a global phenomenon everywhere. People are much more interested in holding their own assets and self-custodying their own assets, which is peer-to-peer, and that's what cryptocurrency was supposed to be, and to move and to transact out of the old fiat system, the banking system that charges you an arm and a leg for anything you do, whether it's a currency, you know, transaction or whatever, okay? The banks, as far as I'm concerned, if they don't take up cryptocurrency technology and AI, they are missing the biggest thing in technology since the internet. They're just nuts. Anyway, guys and girls, that's enough for me today. A lot to talk about, a lot of news stories out there. Sorry if I couldn't cover them all. There are just thousands and thousands, and we have to focus on the stuff that's pertinent to our investment portfolios and trading portfolios, and also what we think are the big stories that are going to affect cryptocurrency particularly. Anyway, I hope you have a great day, beautiful sunny day here, and I'll talk to you very soon. And thank you very much for listening.